Welcome to The Explainer. Today, we're diving into some really fascinating research, and it tackles a huge question. We're talking about Bitcoin, right? The ultimate financial rebel. But what if it got co-opted by the very system it was supposed to disrupt? Well, the answer, based on the data, is a total game changer. Okay, let's just get right into it. For years, we've heard these two totally different stories. On one hand, you've got Bitcoin as digital gold, a safe place to park your money when things get chaotic. But on the other hand, is it just another risky asset getting thrown around by the same old market forces? Well, the research we're looking at today, it gives us a surprisingly clear answer.
Right. So to really get what's happening now, we've got to rewind a bit. We need to go back to the very beginning, to that original promise of what Bitcoin was all about.
I mean, the whole idea was kind of revolutionary, right? Bitcoin was supposed to be this digital rebel. Think of it like its own private island, completely cut off from the mainland of traditional finance. All the banks, governments, and stock markets. The whole point was for it to be something completely new, a totally independent kind of asset. And you know what? For a good while there, the data actually backed this up. You had academic studies coming out saying things like crypto was rather independent, that it was in relative isolation. Basically, Bitcoin was doing its own thing, marching to the beat of its own drum. And that, of course, made it look like an amazing way to diversify your investments. But then things started to get a little weird. The real world started throwing some curveballs. We started seeing stuff happen that just didn't really fit with that whole independent asset story. And it became this huge puzzle for investors and researchers. Okay, so check this out. The paper points to this one key moment. It's October 11th, 2018. The stock market takes a pretty big hit. And what happens to Bitcoin? It drops right along with it, down about 7%. It was like the first real sign that maybe Bitcoin wasn't immune. Maybe it could catch the stock market's cold. So that really begs the question, right? If Bitcoin is supposed to be this totally separate thing, why on earth was it falling right in line with stocks when things got rough? I mean, had something fundamental actually changed? Well, this is where it gets really interesting. The research we're digging into today, it doesn't just suggest something changed. Oh no, it pinpoints the exact day it all went down, a single critical turning point. And that date is December 17th, 2017. The researchers are really clear on this. They say this is the day that basically split Bitcoin's history in two. There's the before era and the after era. So what happened on that day? Why was it such a big deal? Well, that was the day Bitcoin futures were launched. And this was a new kind of financial product that basically let people bet on where Bitcoin's price was headed without actually having to own any Bitcoin. And this one little change, oh man, it had these huge, massive consequences nobody really saw coming. Okay, so these futures, they completely changed the game, and they did it in three main ways. First, they threw the doors wide open for the big players, the huge institutional investors, by giving them a legit, legal way to get in. Second, for the first time, it made it easy to short sell Bitcoin. That means traders, or pessimists, as the paper calls them, could now bet on the price going down. And third, and this is probably the most important part, all of this built a permanent bridge. It connected that lonely island of Bitcoin directly to the mainland of traditional finance. Okay, so now that we have that background, let's get to the absolute core of this paper's findings. It all comes down to this idea of, well, a financial flu. Or, as economists call it, contagion. Financial contagion, it's a pretty simple idea, really. It's when a problem in one market spreads to another one. It's like one market sneezes and another one catches a cold. So what the researchers did was use some pretty heavy-duty statistical models to see if this was happening between stocks and Bitcoin. And they looked very specifically at the time before futures and the time after. And the results? Wow, they were absolutely stark. Before futures came along, that connection between Bitcoin and the stock market was pretty weak, almost nothing. But after futures were introduced, that connection just skyrocketed. The two markets started moving together way more closely. And here's the real kicker. The connection was strongest with the NASDAQ, the index with all the big tech stocks. All of a sudden, Bitcoin stopped acting like digital gold. It started acting a lot more like a risky tech stock. So that leads us to the ultimate question, doesn't it? If Bitcoin is now tied to the stock market, what happens when investors get scared? Where do they run?
To figure this out, the study looked at what investors actually do during a market downturn. They basically followed the money to see where it went when panic hit. And again, the results were just crystal clear. Investors are no longer running to Bitcoin for safety. They're doing the complete opposite. They are running away from it, treating it just like any other risky asset they need to dump, and they're retreating to safer places, like the Nasdaq. So this all brings us to the big takeaway, right? The so what of all this, and why this is so important for anyone who's even thinking about investing in crypto. What this research does is it just completely flips that whole digital gold story on its head. The old way of thinking was that Bitcoin was a safe place, a refuge. But the new reality, at least according to this data, is that it's become just another risky asset, something investors sell first when they get nervous. I mean, the paper's conclusion is super direct, no mincing words. It basically says that the very people who are looking for safety, the risk-averse investors, they're the ones leading the pack away from Bitcoin when there's a crisis. And that really suggests that the days of Bitcoin being this isolated, safe haven asset, well, they might be over. And that leaves us with a really provocative final thought, doesn't it? For Bitcoin to get bigger and be taken seriously, it needed things like futures to bring in the big money. But in the process of doing that, by becoming more mainstream and accepted, did it end up trading its independence? Did it give up its rebellious soul for a seat at the very same table it was trying to flip over? That's a question that's definitely worth thinking about.